the ultimate coiled spring pattern. Learn to spot triangle corrections and ride the explosive breakout. Master Day 11.
Welcome back, everyone, to Day 11 of our Time and Cycle Mastery 60-Day series. Today, we're looking at something truly fascinating. I want you to imagine a heavy-duty metal spring. When you compress it, pushing it down tighter and tighter, all that kinetic energy doesn't just vanish. It builds, it compounds, and it waits. Well, the financial markets do the exact same thing, and today we're decoding the market's ultimate coiled spring pattern. We're unpacking a specific, highly explosive setup known in Elliott wave theory as the triangle correction. This is a pattern I absolutely love explaining because it takes what looks like messy, sideways market noise and transforms it into a highly predictable launch pad. When you finally know what to look for, you stop seeing chaos and you start seeing the countdown to a major market move. It's kind of like having a cheat code for the charts.
Okay, let's dive right into this roadmap. Today we're covering the ultimate coiled spring, anatomy of the triangle, where do triangles appear, the wavy trap, and finally, trading the explosive move.
Let's kick things off with part 1, the ultimate coiled spring.
You know, markets rarely move in a straight line forever. Even in the absolute most aggressive bull or bear trends, prices eventually have to pause. A triangle correction is exactly that pause. It represents a period of market consolidation where buying and selling pressure reach this state of temporary equilibrium. Actually, scratch that. Think of it more like a tired trend that's just running on fumes. The price slows down, momentum fades, and the price action starts overlapping to form this wedge shape. Now, most amateur traders see this sideways chop, think it's random noise, and just step aside. But to the trained eye, this compression is screaming that a violent release of energy is imminent.
Moving right along to part 2, anatomy of the triangle.
So how do we actually spot this compression? Elliott wave theory is deeply mathematical, and we've got some core rules we have to respect. A true triangle correction must consist of exactly 5 corrective waves, labeled A, B, C, D, E. And these aren't your typical impulse waves. These internal waves absolutely must overlap each other. Here's the secret to memorizing this. The subwave structure is 3-3-3-3-3, meaning each of the 5 legs subdivides internally into 3 smaller corrective waves. They are uniquely, entirely corrective in their internal structure. And finally, as these waves unfold, they're bounded by converging trendlines that visually squeeze the price tighter and tighter.
And this brilliantly illustrates the exact setup we're talking about. Notice that initial massive move up, followed by the start of the consolidation at point A. Then B moves up, C moves down, D moves up, and E moves down, with each wave stepping right on the toes of the previous one. Those boundaries drawn across the highs and the lows are converging. They're acting like a funnel that narrows the price action until it simply has literally nowhere left to go but out. Now, while triangles can sometimes be a bit complex, like the 2 variations we're looking at here, just keep in mind that while individual internal waves might deeply subdivide on your specific time frame, the general contracting, converging shape makes that built-up tension incredibly obvious. That 5-wave structure paired with this general wedge shape, that is your green light that a triangle has formed.
Section 3. Where do triangles appear?
Finding the shape is really only half the battle, right? Context is everything. According to Elliott wave principles, triangles usually appear in 2 very specific locations: wave 4 of an impulse sequence or wave B of a corrective sequence. And what do these 2 locations have in common? They are always penultimate movements. A wave 4 triangle is the consolidation just before the final dramatic wave 5 impulse. A wave B triangle is the consolidation before the final wave C correction. They're the calm before the storm. Now, what's really interesting about this is how perfectly it plays out in the real world. On this hourly chart for the Deutschmark, you can clearly trace that A, B, C, D, E consolidation phase right smack in the middle. The converging trend lines lock the price in. It looks messy, it looks highly volatile, but the underlying geometry holds. And notice what happens the exact moment that structure completes. The price practically goes vertical. That vertical move brings us to the ultimate payoff of identifying this pattern. Triangles signal one final explosive move in the direction of the larger trend. They're basically telling you the market is preparing for one last push. If you've identified a contracting triangle in a bull market, you're looking at a high probability guarantee of one last violent directional thrust upward before any major reversal happens.
Which brings us to Section 4, the wave trap. But, the market rarely makes things easy for us. It often tries to shake out the weak hands right before the explosive move. Think about this for a second. If this pattern is so reliable and the geometry is so clear, Why do so many traders end up losing money or getting stopped out right before the massive breakout actually happens?
The answer lies right here in this source text. Wave E, which is the final wave in the horizontal triangle, will very often stage a false break of the boundary trend line. Think about the emotional psychology going on here. If this triangle is a wave 4 in a rising market, that false downward break in wave E is going to suddenly instill deep bearish conviction in amateur traders. They think the bottom is completely falling out. They panic sell or they short the market, and hey, we've all been there. And the exact moment they do, boom, the trap snaps shut, and the market violently shoots up into wave 5. It is literally pure psychological warfare.
All right, part 5. Trading the explosive move.
So the crucial point is, how do we catch the move without falling into that trap? Well, we have to combine our wave counts with Fibonacci relationships to pinpoint exactly where this spring is going to bounce. Most traders just count waves, but the ones who consistently profit add fibs to the mix. Notice how a wave 4, which is where our triangles often form, typically retraces a shallow 38.2% or 0.382 of the massive wave 3 that preceded it. By anchoring your Fibonacci tool to that previous move, you can identify the precise support zone where that tricky wave E is highly likely to exhaust itself, even if it briefly pierces the trend line.
Once you have your zone mapped out, you need a mechanical trigger to enter the trade safely. Here's your execution plan straight from the texts. First, identify that overlapping A, B, C, D, E structure. Second, and this is the real secret sauce here, draw a trend line linking the extremes of waves B and D. Finally, your entry trigger is a decisive break of that BD trendline. You don't try to guess when wave E is over. You wait for the market to prove it by slicing right through that BD boundary. That decisive break is your absolute ultimate confirmation that the coiled spring has finally released.
Because as the text wisely reminds us, patience is everything here, because the most reliable entry comes only after the pattern fully completes. If you try to jump the gun and trade inside the chop of waves B, C, or D, you are going to get chopped to pieces. You have to let the market do the hard work of building up the tension. You just wait at the BD trendline with your net ready.
These triangle corrections are everywhere once you know exactly what to look for. They're the ultimate testament to how market psychology compresses and releases in these highly predictable mathematical rhythms. So the next time you see a trend exhausting itself into a tight, overlapping wedge, I want you to remember the ABCDE structure. Watch out for that sneaky wave E trap and wait patiently for the BD trendline break. Will you be ready to catch the market's next coiled spring? Pull up your charts today and see if you can spot one forming right now. That wraps up today's deep dive. Stay focused, keep analyzing those charts, and I'll see you right back here for day 12 of our Explainer series.